of Peter. When Jesus came to the Sea of Gennesaret, he offered his life in the form of a boat. Then the miracle was an awesome catch. So was the little boy with 5 loaves and 2 fishes. Jesus broke it, blessed it, they all ate it. Now I see how a miracle comes. So Lord God, this is my prayer.
Yeah, good evening guys. Welcome to another video on support and resistance. Last time I was talking about traditional support and resistance. I call it traditional because that's what we've learned over the years, and also I call it traditional because I'm currently applying a different support and resistance. That is what I'll be doing in my next series of videos. This video will be my last in this series. I call it informationals. So today we'll be discussing market structure with support and resistance. Okay, market structure with support and resistance, or market, let me change this, market structure with traditional support and resistance. Okay, now these are some of the things we'll be discussing in this video. We'll look at some of the things we'll be discussing in this video will be types of market. Now we have sideways or consolidation markets. We have what we call an uptrend, and we have what we call a downtrend. Then we'll look at common price patterns. We have the M pattern, the W pattern, the V pattern. These are the common ones that I personally also like. Then we would also I'll tell you the best price pattern I always look for to trade. Then we'll also look at trading support and resistance based on market structure. In other words, we would be trading, or we'll be analyzing the markets based on market structure and looking at support and resistance levels, so that if, for example, the market is in an uptrend and a resistance is broken, it becomes support. So then we are looking to buy from that support, and vice versa. Then I'll finally give you an important announcement towards the end of this video. So let me quickly go to my drawing board and we touch on the first, which is the types of market. First we will look at consolidation market. Let me grab my pencil. Let's just say this is the range. This is how the market is here. Let me pick it. So if the market is moving like this, okay, we say that when the market is behaving like this, we say that we are in a sideways or a range or a consolidation. Sideways, let me see. Sideways, range, or consolidation. It just means that the market is in these two levels. The top level is obviously your resistance, because it is holding the market from traveling above it, and the bottom is your support, because it is holding the market from going down. And so in this type of market, if you are trading, you should buy very close to the support and you sell very close to resistance. So this is the first type of market, which is a sideways or range or consolidation. Now let's go to another type of market. Let's look at an uptrend. Okay, an uptrend. So let me grab that. So an uptrend, let's see, we have something like this. Then we started moving like this. them in that order. This is what we call an uptrend, because first you see that price was here, okay, price was down here, then it traveled above this level, then came down a bit, traveled, then kept going up. You know, this market moves in waves, okay, this market moves in waves, and so even if we are going up, we'll still come down a bit. Now this is a basic example of an uptrend, and in an uptrend we normally have what we call a low, a high, a lower high, then a higher high, in that order. When we go to the charts, I'll label them well for you. This is just an example. So this is an example of an uptrend. And also in an uptrend, when price breaks resistance, it becomes support. Price breaks, this is another resistance, it becomes support. Okay, so we'll be using this to analyze how to take a trade based on market structure, so that if you are going up and price breaks a resistance, you could look for an opportunity to buy from the resistance, which has now turned to support. When the price gets into the support zone, you can buy and continue with it. Let me quickly touch on a downtrend. Okay, a downtrend. Let me pick my blue color. So we have something like this. Let's see, we have something like this. Yeah, so that is a downtrend. We have a high here, then we had a lower high, then we have a low here, then we had a lower low. I'll be labeling them on the chart for you, the lower high and the higher highs. So you realize that price, even though will come up a bit, it came down, went up a bit, came down, went up a bit, came down. Anytime it came up, it couldn't go above the previous high. Okay, so then it continued downwards again. So in a downtrend, even though we are going up, down, down, down overall, sometimes prices, not sometimes, but usually the prices will come up a bit before going down. Yes, so this is an example of a downtrend. Let me quickly go into the chart and label them well. You can have some text edit tool there for us to label them well. Okay, so now I can draw. Okay, so I want to use this to draw the uptrend for us. Then okay, so just want to draw and label it for you guys. All right, so something like this. So something like this. Yeah, so let's continue. Yeah, we have something like this. Okay, So where the market starts from, we call that a low. So I'll label it, let me pick a text tool. We have a low here. Okay, fine. Then that will be a high. Let me type that in to change it. Okay, we have our low, we have our high. Then we have what we call lower high. And this one will be a higher high. Higher high. Then you have another lower high. Then you have another higher high. Okay, so this is basically an uptrend. You see, we started from here, market made a low, then eventually moved away. Realize that there was, okay, let me remove this first and use the pencil. There was this place here, see, but the market went above this and it couldn't make a new low. Yeah, so that is that. The low, a high. So when this low is maintained and we don't get any low coming below this low, we have what we call a lower high. Then this will be a high. Then when this high is also breached, you see, from here up here, we broke this high. So once it's breached, we call it a high high. Now once you see a lower high and a higher high, we say the market has formed an uptrend. The market has formed an uptrend. Then it went up until a time it was unable to make a new high here. Then suddenly we made a low. So this is the low. That becomes a high. Then this one became a low. Then we had what we call a L. Oh man. Alright. And that's the drawing, guys. Okay. I've been able to shift it, yes. So we have what we call higher low. We have a higher low there. Then eventually we have what we call a lower low. Okay, so in that order, we had another higher low here, another lower low here, completing the whole thing. And so we start our downtrend from here. We have a high, then we make a low here, we made a low here, went up to this point, then it becomes what we call a high. From this point to this point, we call it a higher low. Then from this point down to this point, we call it a lower low. Okay, then another higher low, then a lower low. So we say that when we have a higher low and a lower low formed in the market is in a downtrend. Here we say that when the market forms a lower high and a higher high, we are in an uptrend. Then when it forms a higher low and a lower low, we have a downtrend. So an uptrend is a market that has a series of lower highs and higher highs, a series of lower highs and higher highs. That is an uptrend. Then the one with a series of higher lows, lower lows, we have a downtrend. Let me see if I can type that in here. So series of lower highs and higher highs is up trend. Then series of higher lows and lower lows equal to downtrend. Okay, so that is that. Please keep this in mind, it's very important. Series of lower highs and higher highs is an uptrend. Series of higher lows and lower lows is a downtrend. So now we know what an uptrend and downtrend is. We source the price, but let me quickly touch on the price patterns before we go into the charts finally to do some more analysis. Okay. Okay, so let me talk about price patterns in here. We see that before this move up, we have something like a V forming a V from here to here and up here. See, so the price pattern we see here is more like a V. Normally when we see this, a V form like this, it tells us that there is a potential for the market to turn and move in the other direction. So if the market was coming down, let me use a pen. So if the market was coming down, then it forms this V like this. A V is formed. Then most likely when the market pulls back a bit, it will keep going up, just like we see here. Yeah, then at this point we see that the market formed what we call an M pattern. M, it's also a sign of another reversal. See, it's an M pattern. The opposite of the M pattern is a W, like this. It's not always perfect, but we see this often in the market. And a W also like this. Okay, they are all signs that the market could reverse. I'll be showing you the V's and the M's on the main chart pretty soon. So you see, when we got this M pattern, you saw that the market started dropping, coming lower. So that's the behavior of the band. And the V, the opposite of the V, you can call it an A. That's the in the inverse of the V. It's a V inverse or an A. anyhow you want to call it. That's the opposite of the vein. So let's quickly go into the charts and do some analysis. We want to combine what we learned last time in support and resistance together with market structure. We have just gone through market structure. Okay, fine. Before even I do that, let me use the chart to explain market structure first. Now this is the Euro USD weekly chart. Okay. You can see that for a point in time the market was kept in these two ranges. See, so that's a perfect example of a range. Perfect example of a range. You see that the market was held here for a long period from, you see, 1st February 2015 up to December 2016. It is just recently the market broke above it, but this was what was happening all along. So that's a perfect example of a range. Then an example of a downtrend is this one. You see, we come down and we came down. It's an example of a downtrend. It's an example of a downtrend. You see, we started all the way from here, we came down, we pulled back a bit, came down all the way down here, we pull back, we came down all the way down here, we pull back, in that order. So this is a downtrend on the weekly chart, please. This is the weekly chart. Now we can also look at an uptrend. Let's go to maybe the daily. You can see that the market went all the way here, pull back. See, lower high, higher high formed. So we formed an uptrend and we went up, pull back, went up, pull back, and you see where the market has reached now. So we are in an uptrend on Euro USD currently since since the December of 2016. Euro USD has been in an uptrend, at least from early this year. Okay, you can see that. So that is market structure. And when we see it like this, normally when resistance is broken, that is resistance, it comes back as support, then we trade it here too. No, not nice. Let me see if I can erase only this portion. Okay, so you can see that here too we had some support and resistance. No. Okay. Let me make this a bit, it went up, came here, went up, came here, went up, yes, something like this. So you can see that the resistance eventually became support. Okay, here to resistance acting as support here. Here we didn't really get it. Sometimes you don't get it, so it is only when you get it that you trade it. Okay, yeah. So this is just example of market structure with support and resistance. Let me do it again. Let me erase everything. See that from here we went up, we dropped down to this place, we went up. At this point the market made a low, then we made a high here, okay, then lower high, let's call that LH, then higher high here, and this thing, higher high. Okay, so at this point the market was in an uptrend. Let me raise then. So you see that we went above this, came down from here, came down, went above it, and we came down. Okay, then you can see support and resistance. Okay, this one didn't come back down, but see that when we went above, came down. At this point we had support and resistance too. Look at this closely, realize that this level 2 broke. You see, we went, it was a resistance, came down, then see when this guy was going, it broke it, telling you that the buyers have strength. So when they came down, they couldn't reach this low, then they went up and broke their recent high again. Then it came, and that high was a resistance, came to test it as support. And so if in this structure, once we have had this, we are already in an uptrend. So it means that in an uptrend we expect that resistance will be broken and eventually act as support. Then we will be looking to take our trade around the support area or in the support area. Then we follow the market in that direction. So you see that this area too got broken, but it was not a good support and resistance. Then we got to this resistance, it got broken, then it came to act as support, and see where we are. It is the same for a downtrend, same analysis for a downtrend. Okay, see that in a downtrend the lows will be breaking, giving way. Okay, ooh, wow, like from up here you realize that we were in a downtrend at this point. This is a high, this is a low, okay, higher low, lower low. So at this point we were in a downtrend. You can see that in a downtrend, because we are coming down, this support got broken, went up, then got broken, then acted as support and resistance here. See, this support got broken. Yeah, so see that this was a support, then when it got broken it acted as resistance here. This is also a support, then resistance. So that is market structure. Let's do more examples. We want to see if we were trading something like this, how we would do it. Okay, yeah, so last time we learned how to draw our support and resistance lines. So let's put the lines in the obvious turning points. So you can see that this level has acted so well as support and resistance. It's another one here. So let's use that as an example. Then when we are doing this example, we'll go to the lower time frame to look for the trade. We are on the weekly chart, so we can go to the daily or the 4-hour chart to look for the setup and trade it. Okay. Okay. So so at this point, the market was here, came all over here. Okay. Moved all the way from here, came there, and we have this has to be adjusted a bit. So you realize that when it moved out here, up there, it came to find support here before moving up. So now we are in an uptrend. We have lower high, higher high. When we have a series of lower, once this lower high, higher high forms, we are in an uptrend, and the market was pulling back. Okay, so we pull back. We found some support here, not the best though. So you can see that this was a resistance and it got broken. Okay, so it's acting as support here. It's what, 4th March 2011. I want us to go to a lower time frame to look for it. I'm trying to locate that. Yeah. So once we know that the market is in an uptrend, whenever we are getting close to a support, like here, this is a resistance. Let me draw it. This is a resistance. Then it acted as support here. Okay. Then came down back here and went up. I want to ask you, I want to go to a smaller time frame. What date is this? 2011. Okay, yeah, so this is it. So you see, price has been in an uptrend. Moved all the way up here. Move all the way up here. The market resisted this, then came down, but eventually broke it. Now you see that this level has become support and resistance. See that the market came back to it and tested it and see. So that is the whole thing. There is in an uptrend. When the resistance get broken, you should wait for price to get closer to the broken resistance, which is now the support, to take the trade. Let's do one example for a downtrend. Oh. Downtrend. Okay. See, the market found support, it found support here, then it broke it. So you see, it tested it, then see what happened. The market found support even here, but once we broke it, it now became resistance. And see where the market has come. Okay, so please, you can be doing these exercises for yourself. You go to higher time frame support and resistance, and you can go trim it down to your smaller time frame, even to the 50 minute, 1 hour, 15 minutes, 30 minutes, 5 minutes chart, to look for a trade setup, okay, based on the higher time frame structure. On the higher time frame, we are in a downtrend already. Okay, so that is that for today's analysis. I'll quickly go to my announcement, then that will be it for this. Now, in this announcement, I want to say that so far what I have been putting on YouTube for you guys is mainly for informational purposes. Most of the things I've talked about, that is how to use MT for money management, candlestick patterns, support and resistance, market structure, have all been dealt with by some of the mentors I've followed. So I'll be recommending especially at least 2 people that you can look out for when you want to know anything about the fundamentals of trading, that is candlesticks, support and resistance. Please, I will not be doing more of this again, so you can always look out for this name on YouTube, Navin Pretiani. Let me even confirm that if my spelling is right. Okay, okay, so that is one. I learned a lot from Navin, support and resistance, candlesticks, and another person that I've learned from a lot is MJ Huddleston, aka ICT. He's popularly known as ICT, and is one of the people who have popularized what we call institutional order flows. He and another guy called Chris Lowry. But I've not learned much from Chris because MJ Huddleston's works were free online and we had it, but recently he had to pull them away. So I've been able to follow MJ and learn a lot from him, even though I don't incorporate everything he does. So I don't really have much from Chris. I've watched 1 or 2 free videos from Chris Lowry, but MJ is the guy I've learned a lot from. Apart from Navin Peritiani, it is MJ Huddleston, Michael J. Huddleston, popularly known as ICT. So please make sure that you learn everything about support and resistance, all information, candlesticks and candlesticks patterns from this guy Navin Pretiani. Let me search his name. I want to be sure of the spelling. Okay, so that is that. So he has a lot. You can Google and follow him. Yeah. Alright, so guys, that is that, because like I'm saying, almost everything, support and resistance, candlestick patterns, they've been taught by a lot of people, and at this stage I want to move away from this and move straight to the way I trade. I currently combine a bit of Navin Prithiani's knowledge, or what I've learned from Navin, and MJ Huddleston. That's how I trade. I combine both of them. You know, Navin's this thing has to do with a bit of Elliott wave, what we call leg counting. Then MJ's has to do with institutional order flows. Alright, this video is already getting long, so guys, try and follow Navin on YouTube. Thank you very much. See you in another video.